Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. This is the weekend market review for the weekend of February 3rd and 4th, 2018. We're going to take a look at various different sectors in the markets for multiple time frames to get a better understanding of what the market's doing, where it's been, where it is, and where it likely is going. So let's have a look at what's taking place in the markets today. So we'll start with the 10-year Treasury yield, which is a very important indicator with regard to fixed income, dividend-related stocks, as well as commodities, inflation-related names. And I just want to point out what happened here on the daily chart once we broke out that 2.6 level, which was very, very important. I've been pointing out for a while that momentum had been leading price, which is a very important indication that price is likely to follow suit. And sure enough, look what happened here over the last couple of days. It's been absolutely on fire. Interest rates appear to be headed towards that 3 level, which is serving like a magnet there. Now, let's look at the same indicator from a weekly standpoint, and here again it's starting to really break out. It broke out above that 2.6 level that I pointed out. It's now above, it's in this overbought territory, but that's precisely where the biggest moves happen, above that 69 and 70 marker here. And so while on the one hand you might say it's got some negative divergence where momentum today is lower than momentum when price was actually lower. So you want to keep an eye on this one, but ultimately I think this one's headed to 3.1 before this rally takes a breather. Well, because MACDs are firmly in the basically 12-month highs, and it looks like it has a lot of momentum behind it, and so we like the Treasury play. And again, on the monthly basis, this is what you want to see here. Look, momentum here is higher today than when price was at 2.9, basically 3. So on a monthly basis, this is a major breakout that's taking place, and I actually kind of scared to think of what might happen once price actually breaks above that 3 marker, because things can really take off from there, and the market really does not anticipate this right now. Gold daily, well, it's pulled back some, and it's actually a good thing because it was getting overheated. And this pullback is nothing more than a pullback. It might find support at 1320, might find support at 1300 here, but I'm not concerned here because this rally here was led by multiple rounds of higher momentum. That's a very positive indicator, but as I've been pointing out in other charts that I posted, the actual miners had been creating negative divergence here. So as the price was going up, momentum was dropping there. So the miners have really pulled back over the last week, and that actually presents a very good buying opportunity in gold miners. But here again, what happened here? Well, and this is another reason why I was kind of saying the pullback is very possible, because momentum here was lower than momentum here when price hit basically the same price target in September of last year. So no surprise, we'll probably pull back some. How much is anybody's guess. Could be 1300, could be a little lower, but ultimately this breaks towards 1400 in our humble opinion this year. Gold on the monthly, well, this is just a major 5-year breakout here, and this is a secular bull. It had a cyclical bear market for 5 years, and now the secular bull is continuing its breakout. And again, for longer term investors, you want to see this breakout above 1400 to really confirm this narrative. But frankly, we firmly believe that this is going to break out at some point this year. There's just too many things going on that are very positive. Now when you come look at junk daily broke down as we thought the probability was increasing that it would, and it looks like it wants to double bottom here around that 35.80 level. That's probably where it finds support, and until then, after it finds support there, we'll see whether it bounces and rolls it back over, or it'll be a firm level of support. So stay tuned. Ultimately, momentum is leading price down here. Momentum is almost at the same level as it was when price was much lower. So we think that this junk correction has got room to fall. Now look at this on the weekly. It closed below the 50 on the weekly RSI, and basically almost below that middle Bollinger Band, or the bottom Bollinger Band. We've been pointing out that it's been creating negative divergence for a long time here. This does not surprise us, and ultimately a pullback all the way to that 33.50 level is definitely in the cards, especially if the market continues to pull back as we believe it may. Momentum here on the monthly has finally closed below or has not closed the month, but finally taking a turn below that 69 level. It's very, very important development. Likely find support around that 61 level over here, but until that happens, there's quite considerable downside. And as we've been pointing out here, if the MACDs curl below zero, as they appear to be doing, we might have a multi-month correction in the cards here. Crude oil here as well, pointed out why we thought correction was coming, because you saw a slight divergence here with price higher, momentum lower, and now it tried to break back above that 70 area, failed, and now looks like it probably is going to pull back here pretty substantially. I mean, in our opinion, taking a look at the weekly, this can go back all the way to 200 EMA of around 58, but typically when it goes towards the 200, it typically breaks below it to shake out some more hands, and so a move all the way down to the 55 level is definitely not out of the cards on crude. Even though longer term we still believe that this inverse head and shoulders here is definitely in play, and this could be creating this kind of cup and handle here as it corrects towards that 50 to 55 level. In our opinion, that's where it likely heads before pulling higher. But look at the NASDAQ daily. NASDAQ daily has definitely broken down. Next support level, it's been like 10 videos since we even looked at these indices because they were so overbought. There's nothing to see here. But now the trend has kind of shifted here. So first price support level here is around that 70, I'd say 70-100 level. So there's still some downside ahead. We're below that middle Bollinger Band. Let's see what the weekly look like. Weeklies have broken below that 70 area, so that's again from a weekly standpoint, a pullback to 6750 area is definitely possible. Coincides with that 6900 area on the middle Bollinger Band. Still in an uptrend so long as it stays above this middle Bollinger Band on a closing basis, but there is considerable downside ahead in the short run, in our humble opinion. NASDAQ monthly, I mean, it was the most overbought it's ever been, so the fact that it's pulling back is no surprise. Question is how fast, how far, is anybody's guess, but stay tuned. The Russell have been, the small caps have been the weakest sector in the market this year in the last 12 months, and so it's kind of no surprise that this is leading the down move lower. Looking at this on the weekly, broke below the 60 area, and the next reasonable support target I would say is about the 1450 area. So there is some considerable downside ahead if it breaks below this middle Bollinger Band around the 1526 area. And I think it likely hits this 1450 area before finding some considerable support. Russell monthly, well, as I pointed out before, this bearish wedge breakdown did happen. We retested several times. We're still in very good condition on the monthly. We're still above that 70. So we'll see what happens here. But the MACDs have been curling towards that zero direction. So very possible that this is indeed setting up for additional downside. S&P, well, S&P might be getting ready for a bounce because this 2750 area is very likely support here. What happens afterward? Does it bounce to 2800 and then roll back over? I think so, but we'll see. So stay tuned. On the weekly, we closed below that 69 handle, so a move towards the middle Bollinger Band could take us all the way to 2650 and still be within the uptrend. So let's keep an eye out on the S&P. And finally, a couple more charts here, but is the S&P large cap monthly. So 2600 from a monthly basis seems like a reasonable pullback. So we'll see if it goes towards that level or possibly pulls back all the way to that 2400 zone on a monthly basis. Still within that uptrend. The dollar starting to rally here some, so that's a development worth watching. It likely runs towards 92 before finding some considerable resistance here. MACDs on the daily are curling up, so that's a positive development for the dollar. On the weekly, this 92 zone is probably where we bounce back to, and we'll see what happens there. Why did I say that this was a possibility? Well, there's positive divergence on the dollar. We hit a low of 88, but momentum was higher than when we hit the low of 91. So that's where what you really want to look at on these kind of double bottoms or breakdowns or breakouts. Are those breakouts real? Well, that's where you want to look at momentum for confirmation. And again, we pointed out this support zone around that 87, 88 area as very likely support, and that's where we are today. And this might be the bottom. We'll see. But ultimately, we think we go lower before we go higher long term. And I think we will see 120 in the next couple of years, but we likely see this 80 area tested beforehand. Volatility, I've been pointing this out. I posted a chart of the monthly, and I'll point that out momentarily. But volatility has broken out here. Look at this downtrend here. This bullish flag has broken out to the upside unequivocally. So, and that's on a weekly closing basis. So volatility is going higher in the short run. So that's a very, very important development. Here this is again on the monthly. The MACD's finally curled above zero. It's closed January slightly above zero, and that was an indication that things were about to start getting more volatile. A lot of these short vol trades have started to cover, and that's what's causing the sell-off in the markets. Nothing else but this volatility trade. How far it goes is what's going to be interesting. Does it go all the way to 45? Does it stop at 25? We'll see. But volatility is definitely back. And again, 2100 on the world global markets looks like pretty strong support. But should that break, we're probably going towards that middle Bollinger Band level of 2029. So there is still some significant downside here, and this is on the monthly basis. We're still in very firm overbought territory and an uptrend. But if this pulls back, this can go all the way down to that 1850 level, and that's a pretty significant pullback still within the uptrend. In fact, it would be very healthy should that happen. Guys, this is our weekly review. We appreciate your support. We've got 5 patrons, so for those of you who are supporting the work we do, we greatly appreciate it. We want to do this for you to educate you and build this active investment community together. So we can't do this without you. Please come over here to patreon.com/Moniology and pledge your support. This video is going to be on the premium side of things, and then we'll post it on the overall on the StockTwits boards later on in the week. Thanks for your support, and have yourselves a wonderful week.